Hello, Zingers. This is Jonathan Mallard with the Benzinga Pro onboarding and product team, and we are so excited to bring you the first webinar in a series of advanced webinars. And I've got Stephen Orr, aka Big Beat, joining us today, sharing his insightful thoughts on the market, some tips, some tricks, and all sorts of other stuff. So stay tuned, and we will also have an opportunity for questions and answers later on. So if you have any questions whatsoever, just go ahead, throw those in the chat. We'll address those. Yeah, thanks for joining us today, Steve. I'll let you take it away.
Well, thanks, Jonathan, and I want to thank everybody for showing up today. It's a big number of people coming into the chat room here and the webinar, and so we're so excited here at Benzinga to start a webinar process. And this is where we will allow every 2 weeks, we're going to come to you with a webinar with my thoughts and possibly others around in the Benzinga world, giving you their thoughts on the sectors of what's going on. Now, these webinars will be every 2 weeks, and so we'll send you out another notice to let you know that the next webinar is coming up and who to expect to see and what we expect to talk about. So we're going to have guests from time to time that will be filling in, and we will be updating you on the next sector that we think is hot, and we'll also have at the end of it a question and answer session every time. And of course, you can ask questions in the chat room as you have to the right-hand side in the Zoom webinar chat if you want to ask questions while I'm also talking as well. Let's kind of get right into the discussions of the markets and the webinar in and of itself. But before I do that, I would like to personally invite you guys to the Benzinga Trading Summit. Now, I will actually be in New York. It's on June the 20th. I expect many of you guys to be there, and come join my friends. A longtime friend of mine, John Nigerian from CNBC, is going to be there. Also, Jeremy Newsom from reallifetrading.com. He's actually going to be trading in real life right there in front of you. I want you to be there for that. And of course, my favorite thing is there's going to be a trader's lounge, and I expect you to, get the premium ticket and come in the trading lounge with me and hang out with me. And there you'll be able to see my trading rules, my trading lingo, how we actually act around other traders. And that is how it changes things a little bit when people see us, on different websites and we're on the social media and the platform. But when you're actually with us and you actually understand what we're talking about, we'll actually explain it to you in a lot more detail. Okay, so on with the webinar. Let's talk about what's going on in the world. And I think everybody right now knows exactly what's going on. It's the trade war. The trade war is heating up. Trump is tweeting quite heavily right now. And we are going to see some Xi Jinping in China, some manipulation. So that has been keeping us fairly busy on our news desk here in Benzinga. And I also think we have the bangs of war coming out. Iran has been on the forefront of just about every single tweet and or social media that we're looking at. And of course today, Iran said they will not have a war with us. So that kind of chilled everything out. Trump has come out and says that, all right, the Chinese trade war here is okay, relax. Whether or not we have to believe it or not has taken some time and some toll on us as traders, because one day it's up, one day it's down. And lately it's been kind of heavily down. So we have to keep our eye very, very tight on that. All right, next thing I'm all going to say is earnings. Earnings have been pretty good. I can honestly say that I wasn't sure how earnings were going to come out this last quarter, but they came out pretty well. And you know what? That's always good. And I always say my trading rules, numbers matter. So make sure that when you're trading and you're buying and you're selling, you may have news, but they better back it up with some real numbers. Mr. Wonderful always says, gotta have cash flow. And I understand that, and I kind of agree that if a company doesn't have any cash flow, then that's a problem, right? So I understand that as well. Okay, so I'm gonna go on and on now, and we're gonna also talk about M&As. That's the next big thing I think is happening right now. And the reason is you saw Disney now with Hulu, and Walgreens rumors today about acquiring AmerisourceBergen. So money is still cheap out there. That means that money can still be borrowed at a low rate. Rates are still low. And what they're doing with it has been stock buybacks. Now, I'm telling you right now, it's a Benzinga exclusive, that stock buybacks are going to slow up. I think that the market's pretty frothy right now. And because of that, stock buybacks have been kind of chilled out a bit. Now, as the market has been pulling back a bit here, you might see some of those stock buybacks that have already been approved start to come in now. And so you might still see a few stock buybacks, maybe like Apple, things like that, still buying in. But stock buybacks are going to slow down. And so with that being said, where is the next free, cheap money? Where is it going into? And that's easy. Listen up. It's going into mergers and acquisitions. I think I just said it. Walgreens and AmerisourceBergen already announcing possibly a deal. Reporter came out today with that. Disney announcing a Hulu deal. So when they don't have anything else to do with their money, what do they do with it? They buy other companies, and that's the easy way. And that increases the cash flow within a company. So when I said cash flow is important, look for those companies that are smaller than a bigger company that can be easily acquired, and look for cash flow. Those companies that are producing money but maybe a little undervalued. And those are the ones that as Warren Buffett says, I'm going elephant hunting. That's what he means. He means I'm looking for a big company that has good cash flow. Okay, so the way you guys have been asking for is, what is my next sector pick? So it's coming right up. So I'm going to go back over exactly the picks that I had in the past. Now, if you were with me in the trading idea picks from the chat room, Benzinga Pro, and or one-on-one calls with me, there is a way. They're gonna set up and show you how to set up a one-on-one with me. It's now in the chat, so now you can actually do a one-on-one session with me. But if you had done any of those things, you would have known back in November that I said biotech was good. The FDA started to approve a lot of drugs. It was a very heavy time for the FDA, and biotechs were very good back in November. Now, if we push time a little bit, and we're going now into December, I said it was time to acquire crypto. And a lot of people have called it the crypto winter. I can tell you one now is that when you buy something, when it's cheap. And at that time, crypto was very low. And of course, we know what's happened in the last few months. Okay, move a little forward in time. Back in January, I said that China tech was good. And I said biotech was bad. The FDA had slowed down their approval processes. It took a little more time to do that. And the biotechs that were up with their new drugs had slowed down. China tech was still pretty good. We saw some movements in automation and automobile sector with China. We also saw some possibly good tweets from Trump saying that, hey, the deal's going through, China's good. And of course, we know what now happened. But back then, back in January or February, I said that China was good. Now, if we push forward to February, it was a short month. I said stay the course. Nothing changing right here. Everything's going to be okay. It's cold. The whole world is freezing. China, everything. Trump was chilling out. Quite frankly, I said stay the course in February. And the month of February was pretty chilled out. March, I came out and I said, okay, stay the course with China. China's still pretty good. Talks were still going well. Obviously, Trump had tweeted quite a bit. Xi Jinping actually, they came over here. They had a whole trade delegation come over here. Everything was fine. Mnuchin said the world was fine. Our Commerce Secretary said it's fine. Everything was fine. And so back in March, we were okay if you were still staying in China moves. In April, I said keep an eye on trade talks, that I wasn't sure exactly which way those trade talks were going to go. The USTR wasn't sure himself, and he was saying, all right, we're still talking back and forth. Let's figure out what's going on. I also said keep an eye on stock buybacks. And as we now know, stock buybacks are slowing up. So you would have been right there with me if you listened to me about stock buybacks, that they were slowing up. Now they're really slowing up, and now we're moving into mergers and acquisitions. All right. So here's what you've always been asking for. What's my next sector pick? And I'm going to ask the question to you: what is and who has the most investment money in the world? Is it Warren Buffett? Is it pension plans? Banks has a lot of money. That's right, Rob. They do have a lot of money. Well, they don't have the most money. Who has the most investment money in the world? It's a very simple answer. Thanks, Rob. Very simple answer. It is the United States federal government. They literally have the most investment money in the world, and the second most investment money in the world is the U.S. states. They have plenty of money. Yeah, they may be in debt, but they can do two things. They can raise taxes, and they can, well, most important thing, the federal government can print money at any time too, as we saw over the last 8 years. All right, so the question is, what is the sector? And it's very simple. It's infrastructure. The infrastructure of the United States has been not so good. The things have been breaking down: roads, bridges, obviously dams, electricity, water. All of these things have to be fixed. And so you may say, Steve, that's a boring sector. And I don't disagree with you. It is a very boring sector. But with the volatility of the market right now, and I'm telling you, the next sector is infrastructure, and I'm going to tell you why. So here's the reason why. First of all, like we just said, that things have broken down. Roads have broken down. We all run through a pothole. We all messed up a tire because we ran through something bad. Electricity, obviously, electric bills in my home state of Florida have gone up because of Duke Energy had to push the prices up because of hurricanes. Dams need to be rebuilt, fixed. Electricity, water, railroads need to be fixed. Warren Buffett has a lot of railroad companies. But Steve, why is this going to happen? Why are they going to spend so much money on infrastructure? And I'm going to tell you why. And it's coming up in June. I'll tell you exactly why. Number one is that both the Democrats and President Trump both want infrastructure bill. How do you know that, Big B? How do you know that infrastructure bill is the next thing up? And I'm going to tell you right now, bills are already being introduced on both sides in the Senate and in the House right now to actually produce these infrastructure bills. And both sides have already said, yes, we want an infrastructure bill. Please give us something. Let's work something out. Let's go into what they call conference and figure this out and create a huge infrastructure bill. How do we know it's actually happening? Well, in order to do this, we're going to have to raise some money. And so we're already seeing some states like Illinois already approved a 44-cent gas tax. And here's something you may not know, that 22 states already in the United States, now that's 59% of the US population, have what they call a variable rate gas tax. A lot of them are screaming and saying, well, okay, Big B, we're going to raise taxes on gas, but what about those cars from Tesla? What about the electric cars that are on the road? And that's what that means, a variable rate gas tax. So they're going to raise taxes on gas like a COLA clause. So as the cost of living goes up, those taxes on gas will go up equally, right? Well, that doesn't affect Tesla. That doesn't affect electric vehicles. And so how are we going to fix that problem? And so many governments right now are doing what they're calling a VMT tax. The VMT tax. It's a vehicle miles travel tax. That's right. They're looking to tax your car based on how many miles you drive it every year. So they're already trying to create a tax benefit right now from to raise money for these infrastructure bills to actually build the roads themselves. Okay. Any questions so far? Give you guys a second.
Yeah, right. I don't see any questions yet on the chat, but with all the comments you made on the roads, I can tell that you visited Michigan, Steve.
Yes.
Man, yeah, you got to watch out. They're pretty much sinkholes over here.
Yeah, and I've traveled all over the United States, not only in the United States, but all over the world, obviously. But I can tell you that the infrastructure of the United States is really crumbling. I mean, we're not to the point of Cuyahoga, River yet, where the river's on fire. But I can say that we're definitely in a situation where infrastructure has really been beaten up. Big trucks with companies like Amazon moving more and more and more product via trucking and not by railroad, you can find out that they're beating the roads up even more. And so infrastructure is not getting better, it's getting worse. And I can tell you, my father always says, if you ever want to know when election time is, it's very simple. Go take a drive and go see all the orange barrels out on the roads.
Right.
So I'm going to drill down a little bit farther. I see your question, Rob, about favorite infrastructure stock list. I'm not allowed to tell you or give you an exact stock advice, but I can give you the sector for sure. And in doing so, I'm actually going to drill down even a little bit further on the infrastructure, and I'm going to tell you where else to look that I'm looking myself personally, okay? And that is in the subsector of infrastructure blockchain. Now, some of you are going to be saying, okay, is that crypto again? No, it's not. It's actual blockchain. And so the flow of all of these commodities are going to have to be kept straight in a way. We're going to have to, the movement and the flow of all of these, steel and asphalt and concrete and these products that need to go to rebuild the infrastructure are going to need to be tracked. And they're going to be tracked in two ways. The first way is the actual product. So if you see steel being made in Pennsylvania and needs to go to Idaho, they're going to track that digitally. And so there's going to need to be these huge, massive clouds computing and obviously blockchain. So, and right now there was a study done within the United States government about this very thing. And the US government said between 2017 and 2022, it's 5 years, that they were going to see a 1,000% increase in blockchain usage on this scale with infrastructure. That's a 1,000%. If you broke that over 5 years, it's 200% a year. So that's better than any stock that I know right now. So we know that that's coming. We know that there are many projects within the Department of Defense that are actually doing that right now. Obviously the Army Corps of Engineers starting to work now, and because of that, they're going to need to keep track. Now, there always are people who are helping the government work as contractors, and so another drilled down sector that you maybe want to be looking at even farther down is HR that's on the blockchain. So in order to keep track of the people that are actually doing the work here are going to need to be, are going to need to be on the blockchain. So I'm looking at HR companies on the blockchain. There are going to be HR companies that are going to fall away to the wayside because they're not keeping up with today's new technology.
Wow.
Jonathan, got anything out there for me right now?
First Q&A here.
Yeah, it looks like we have a
Yeah,
question.
Laura, you're totally right. Because those people will also need to be on the blockchain within healthcare. When you are an employee of a company, you also get healthcare. So they'll need that. They'll need to, if that person that's fixing a road in Idaho gets hurt, and he's from, say, Florida, obviously you're going to keep track of all that. So yes, healthcare blockchain is a big one. And it's probably one of the biggest. It all comes together with human resources.
We have another question here in the Q&A from Jason asking, how about trading the news in the coming privacy battle and fines coming on the social networking space, Facebook, Google, Apple, Twitter, and Microsoft?
So back in 2007, 2008, they already had that debate. Was it privacy? Nope. Back then, the debate was a bank too big to fail? And the answer was, yeah, a bank is actually too big to fail. So the US government bailed everybody out because they had the money. The same situation, it's a little different here now with social media and privacy because we're always worried about our own privacy within our own stuff. The fines will be big, but they won't be so big. Even the chairman of the committee said, I'm not even sure we can find Facebook that big that'll even put a dent in their profits. So I don't see social media being impacted. I do see social media being impacted going forward, and that they will try to fix those problems. Absolutely, because nobody wants their social security number out there. And I would say look at those companies that are actually doing privacy outside of the social media network areas.
Thanks.
Yeah, thanks for the question. That was a good one, by the way. But no, I don't see social media stocks being affected financially over that. Obviously the number one way to make money is advertising, and that's going extremely strong. We're all picking our phones up every 5 minutes of the day, looking at whatever's our latest update of our friends, their birthday bash. So yes, I don't think privacy will be a big issue financially, but it will be going forward.
Cool. So you talked about infrastructure, Steve, and more specifically, infrastructure like blockchain associated with infrastructure developments and blockchain associated with with HR companies, just as they're competing to keep track of everything. Are
Yes.
there are there any other sectors, anything else that you have at top of mind? I mean, give us. We'll take what you got.
Are you pushing me for another sector, Jonathan?
Yeah, yeah. I mean, I think there's a lot of research we can do on the blockchain, but if you had anything else, that'd be great.
Okay. I do have one on my radar right now, and I think everybody should have this on their radar right now. It is literally the fastest growing segment of the world. That's right, the world, not just the United States. The fastest growing sector right now in the world, as we speak, not going forward, but going forward, it's going to explode, and that's esports. People have been asking me about esports for a while now, and the only thing I can tell them is, when I was growing up, I played football and baseball and wrestled in high school and college. And I can tell you right now, you had to be an athlete. Today in school, kids don't have to be athletes to be able to move that Xbox or PlayStation and use their thumbs. And right now, they're being paid big bucks. There are lots of companies out there in the esport world that are looking to train those kids coming up to be professional esports players. And there are a few sectors within the esport world that I am definitely looking at. And the main one is media. Media is absolutely eating up. If you look at television or live streaming like we're doing now, esports is going to be a major player. So I would look for companies that are in the space. I would also look for companies that are covering the space, say like, for example, television and the YouTubers, Twitchers that are out there. They're really heavy into esports. And I would also say that the revenues within esports this year alone just broke $1 billion. That's literally 26.7% jump from last year's numbers. And I don't see it stopping anytime soon. You're going to see a lot of people out there that are looking at Overwatch. I know that I went to an event not too long ago, and I watched an esports game, Overwatch, and my goodness, it was a sold-out show faster than Billy Joel sold out the Garden. So, I mean, that's pretty impressive. And so I think esports, yes. I also think that sponsorship. So keep your eye on the back panel, see who's actually sponsoring esports. That's going to be a big one.
Very interesting. Yeah, we have a few more questions coming in.
Bring them on.
And I think this kind of correlates even with what you've talked about already. Mary asks, what catalysts are you watching for with new tech stocks like Uber and Lyft? Obviously, those have been all over the headlines. But then also, how can you keep an eye on these catalysts even inside of a tool like Benzinga Pro?
Yep. So the one thing that I specifically do is when I research a sector, I look for trends. Whether you go on Google and look for trends or whatever, I'm looking for the next thing, right? It's very easy in the tech world. And in the tech world, I always look for one piece of advice, one little morsel in there that makes me go, okay, how much money are they spending on research and development? R&D is literally the most important thing that you can look for when you're going through a 10K and a 10Q. Yes, places like Apple and Google are spending billions of dollars, but what percent of the company are they spending that R&D on? And are they increasing over time their spending? If they're decreasing their spending, then they're not looking for the next big play. They're looking to stagnate. But if they're looking to really spend some serious dough, then you're finding out that possibly that they're looking to either build something new, create something new, or have a new idea that could possibly be rendered down the line. And you're asking, I see Ron has asked me, what summer trends are you looking to trade this year? I'll be honest with you, sell in May and go away has been working quite well for a few years. Will it work this year? There are a lot more people trading online. So it's one of the biggest things that we've seen lately is that the world of trading has picked up. And because of that world of trading being picked up, I do see social media stocks. I know we was asking about that. Will be doing quite well actually. And I also see, like I said, infrastructure for sure in the month of June. But a little bit further and down the pipe, I think that you're going to see biotech once again pick back up. Biotech has been bad lately, and I think it's going to pick up. So, yeah, Ron, I do see the biotech world because of the FDA. We do have to keep in track of when Congress goes into recess, and that's usually in August. And I can tell you, being a trader in New York, that a lot of traders go to the Hamptons to hang out. So trading volume slows up quite a bit. So we always have to keep a close eye on trading volume. Okay, Rob Avila is asking me, what do you think about cannabis stocks? Yeah, it's the next big thing too. Cannabis is going everywhere. But I do think that the commoditization of cannabis, so eventually the price of CBD oil, the price of cannabis will come down, especially as other states start to pass laws approving it. I know here in Missouri that cannabis laws are about to be passed recreationally, and CBD oil is already a federal law. So, you know, the prices of things will come down, especially as supply and demand, right? Supply goes up and demand starts to wane a bit. I think the price of the actual price of the products will come down. We'll have to look at one thing within cannabis stocks, and that's the margin. What's the next cool factor within cannabis stocks? Now, if you ask me what's up cannabis stocks a year or 2 years ago, I'd say, well, you know what? Only in Canada we actually use cannabis. But now here in the States, it's growing, and it's a worldwide product. So we will be using it, but eventually it'll have the Walmart, Amazon effect with everything else that's like a commodity.
Absolutely.
Position. Sam's asking me a question about my position on goods and services positioning with tariffs through September. That is an extremely good question. Position on goods and services positioning with tariffs. It's going to raise our tariffs, raise our taxes on our products a bit. I think some people are saying that an Apple iPhone may go up between 10 and 15%. Is that so much money that that China doesn't continue to screw us on the tariffs? I mean, I don't know the answer to that question yet on that side, but I can tell you that the trade war is very serious, and it could have an effect on the actual stock market itself. It seems like Trump has a tweet, or Larry Kudlow comes on CNBC, and we're always, oh, what's he going to say? And the next thing, and then Xi Jinping says no. So on the goods and services side of tariffs, I don't think it's going to have a massive effect. And as we all know, it only hurts one person, and that's the consumer. So is that going to hurt Trump in November? If people started saying, hey, prices have come up, inflation has started to pick up. Now, if you start to see inflation picking up based on tariffs, now we have a different story. So I would keep my eye on inflation. But inflation's low. The Fed has said that. They've also said that cheap money's still out there. So nothing has really changed on that front. Jonathan?
I really like this question coming in from Art here, just asking, what are the rules of thumb and practices that you follow on trading daily earnings reports, i.e., when you buy and sell?
So earnings reports are very, very vital to the stability of the market. We must have earnings because we know which way a company is going. If they have more earnings, they're doing better. We set expectations, and the government has started to slow up a bit on expectations. Right now, we go quarterly. They're talking about even going every 6 months because it seems like they're constraining the corporations. But the reality check is, I want to see 10Ks and 10Qs every time. When it comes out, do I have to do that? No, we have an amazing news desk here at Benzinga Pro, and whenever an earnings comes out, we let you know immediately. And so how it actually hits us and me in my trading, I had to look at a couple of things. Is it an earnings beat? Is it an earnings miss? So I am always listening to the word miss or beat. My nickname is Big Beat for a reason. But I need to know how much. And I also want to look in the past if they beat before. And if they have beat in the past, let's say a penny or 2 pennies, not a whole lot, right? But if they beat by 50 cents or $1, that's a different story, especially if it's growing, right? I'm also looking at a couple of other things. I'm also looking at the earnings from a perspective of where they wanted to put that money. And I said R&D before, but maybe it is into building its own infrastructure, its own, what is Tim Cook doing with that Apple money? There's a lot of money. So if he's earning a bunch of money and not doing anything with it, that seems to be a problem too, right? And so it's not an aggregate to pushing the stock up. So usually it's a little more stagnant. On earnings, I'm also looking at what was the whisper number. I'm always looking for whisper numbers. What does the rest of Wall Street think? There's a lot of good websites out there. We're bringing you earnings whispers ourselves within the Benzinga Pro site. I can also tell you that in earnings, I'm also looking to see what other people did, what was their estimate? Was an estimate too high or too low? And if I look at an estimate, it's really way off what I think it's going to be, then that's a good play right there. So if I see an estimate jumping quite high and then they don't make it, there's a good sell signal for you.
That's great. Let's see. I think I don't know if you got to. Oh yeah, you already got to Sam's question on the tariffs through September there. Well, let's see here. Do you just want to pull up Benzinga Pro for a minute here, Steve?
Sure.
And then just because there's a lot of the questions here in terms of finding catalysts, whether that's on tech stocks like Uber and Lyft, or focusing in on infrastructure or blockchain. Maybe there's just a few different examples here of where you could show our users just how to find those types of catalysts and information.
Are you able to see my screen, Jonathan?
Yep.
Okay, good. Well, a lot of you have always asked me about the Benzinga Pro site and how do I find some cool breakout plays. And I'm going to tell you, I'm going to give away a secret. So if you're listening in today, I'm going to give away one of my secrets of how to find a possible move. And one of my favorite things that I like to play is the options market. So I go to Newsfeed right up here. I'm going to pull it open here. Newsfeed will pop up for us. Here we go. And as it comes up, we're going to see the sources being two. And you only really need two, because if you're looking for some place, I don't want to bunch up the newsfeed with other things. And I look for a certain word, and this is a key word that, because you're in the webinar, you're going to get to see this. I look for the keyword of sweep. When I pull up the word sweep, I am looking at bigger options plays. Now remember that an option is 100 shares per play. So if you see a big order, then obviously you know that that's a bigger play. When it's a sweep, that means the order is so big that the market can't handle it and it has to break it up. And so you're going to see up there at the very top, LL, lumber liquidators. I'm going to explain this line to you so you understand and see how I see it. They obviously bought those puts, which means that it's a bearish play, and you'll see it's $11.50. Now you'll see that the number 42, that means there's 42 routes in which that option play had to go in. And you'll notice to the right of that is the number 1,000. That's how many shares that they bought. Is it 1,000? Nope, it's 1,000 times 100. And they bought those at 50 cents. And the open interest, which means how many, the volume around it that actually didn't move, it didn't actually lift, was 339. So that's a big play going into that position. So that's how I always look for certain plays within, especially if I'm drilling down to a sector. If I find a sector that I like and I'm drilling down and looking at the news feed, I'm finding the sweeps.
Awesome. Let's see. Where else could we find, like, say, some of these companies in these sectors?
So without giving too much away, obviously, we'll go to my main panel here. And you can see how my screener is set up. I'm going to do this for the webinar today. How about that? Today, I'm going to actually show you how I apply filters within my screener when I have learned that I know what sector to look for. And if you'll see the applied filters here, you'll see here, click here, and you'll see that I have gainers and losers. And now we are here now in the aftermarket, but when we're in the pre-market, make sure the pre-market is checked. When we are in the regular hours, make sure the filter is checked on regular hours. And of course, after hours, which we are in now, I'll click on after hours. Now, for myself, I'm always looking for play equities within the 15-minute period. The reason, that's not saying a 15-minute chart, it's saying over the last 15 minutes, how far did this equity move, all right? The next section I'll look at is sectors. All right, here we go. The webinar is about sectors today. So let's look into industrials. We were talking about construction, so I want to put industrials. I know one of you asked me about healthcare, so let's put healthcare in there. We're going to leave the technology alone today and look for utilities, because utilities is electricity and water. Just click away from it. You'll notice that these things will change. And I'm actually, because I'm looking for bigger plays, a small company cannot handle a US contract. So I'm going to move this to $10 billion. I want bigger companies. And the price of the stock really doesn't matter to me. I don't care what the price of the stock is. All I care about is, are they getting contracts, right? And so I'm going to apply filters, and there you go. You can start to see within here what are the big companies in the healthcare and in the construction industrial sector. Now, for me, I like to see what is really moving. So if you look up here, you'll see the volume, and I like to click it not once, but twice. And now I can show you that Centene is the biggest player today, the movers in the aftermarket here at 1.045 billion shares have traded here in the aftermarket. And so it's very simple. I can also click on Centene. I can also see what I always suggest having a details page. You'll see it down in the bottom. And when I clicked it, you'll see what's going on. Now, Centene, obviously, I can't recommend any stocks. I just pulled this up out of nowhere. But if I look at a one-year chart, you can probably see that it's probably down and been beaten up a bit. And that's when I always tell people, when do you buy, when it's low, and when do you sell, when it's high. So a lot of people forget that. A lot of people chase, and that's one of my rules. I don't chase. I never have, and I never will chase. And of course, when I make a position, I don't have any emotion whatsoever. But if you look down below, and one of the things I did say today was I look for R&D and I look for key data. And so in the key data, I always look for, there you go, market cap, industry average. So here you'll see the market cap of Centene is 22.69 billion. The industry average is 25, so it's a little bit bigger than the industry average. And the government is looking for that too. They're looking for big companies. They're not looking for small companies to put in roads and bridges and putting in healthcare for major companies. So they're looking for that. Probably looking for something very stable. So you want to make sure that you have a low PE as well. Right now, the average PE right now is right around 16, 17. So they want to make sure that the PE is a little bit below that. And there's some room for growth. We always want to look for growth. And we want to look at the balance sheet. Do they have assets? Do they have debt? And of course, we're looking for what? For mergers and acquisitions, looking for cash flow and how much cash do they have? And so cash, they have about 6.345 billion. Well, one thing I learned a long time ago from a very famous broker of mine and a very famous friend of mine said that also look for institutional ownership in a company. That's 87.57%. Now, why is that important, Steve? Well, that means institutionals can dump on you at any time. So if they have a high number of institutional shares, the toots, as we call it in the lingo, when the toots have, they can dump at any time on them. So be very careful. Always have stops in.
Awesome. Thanks, Steve. I think we're nearing the end of our time for today.
Oh, already?
Yeah, it's time flies when you're having fun, but
I do this every day, Jonathan. I mean, this is work. I love this stuff. This is what I got into it for many years ago. I continue to do it for many, many years. You know, that's the wonderful thing about this job is that every single day is something new. There's nothing is the same. You may have the same sector, you may have the same month, plays in the month, but there's always something hitting you. The social media, the news, and Benzinga is very good at getting the news out to you. So, and that's why I'm here at Benzinga, because I think they do a pretty damn good job of getting the news out.
Absolutely. And guys, don't forget that you can set your own meeting with Stephen. Just follow the link that we threw in the chat. And do not miss out on the Benzinga Trading Summit on June 20th in downtown or in New York City. You're not going to want to miss out on that. So go to bzprofit.com and get all the information on the event, and be sure to meet us there. So we really appreciate each and every one of you guys. And hopefully you can tune in a couple weeks and we'll have some more info for you.
I look forward to that, Jonathan.
All right. Have a great day, guys, and we'll talk to you next time.
Thank you. All right. Bye-bye.